Welcome to the AI Unraveled Weekly Masterclass, your definitive briefing on how artificial intelligence is rewriting business, technology, and human society. It is Sunday, April 5th, 2026. I'm your co-host, Anna. Today's episode is brought to you by DjamgaMind. In a week where OpenAI is buying media networks and enterprise data centers are stalling, you cannot rely on hype. DjamgaMind delivers technical-grade, human-verified audio forensics across healthcare, finance, and enterprise tech to help the C-suite navigate these exact market shifts. Visit DjamgaMind.com. The first week of April 2026 just rewrote the fundamental laws of gravity for the global economy. We begin with the largest private fundraising event in human history. OpenAI has just closed a $122 billion round at a staggering $852 billion valuation. But behind the money is massive internal turbulence. Top executives are stepping back. The company is buying up independent media networks to control its IPO narrative, and investors on the secondary market are desperately trying to dump $600 million in OpenAI stock to flee to Anthropic. And if you want to understand absolute leverage, look at Elon Musk. As SpaceX files for a record-breaking $1.75 trillion IPO, Musk is literally extorting the world's biggest banks, forcing them to buy tens of millions of dollars in Grok AI subscriptions just to get a seat at the underwriting table. But while the software valuations touch the trillions, the physical world is hitting a brick wall. We look at the chilling new data showing that 50% of all planned U.S. data centers are delayed or canceled due to a massive global shortage of transformers and Chinese battery imports. From a solo founder using AI to build a $1.8 billion healthcare empire from his living room, to a major data breach at Meta and 100 autonomous taxis freezing in the middle of Wuhan, this is the friction of the future. Let's unravel the week.
Imagine raising $122 billion, securing a valuation that's literally larger than most global economies, and then realizing your biggest existential threat isn't a competitor at all.
Right, it's a transformer shortage.
Exactly. A piece of physical hardware.
Today we are dissecting the massive collision between infinite software leverage and, well, the totally unforgiving laws of physics. Welcome to the deep dive.
Yeah, glad to be diving in.
We are looking at the major news themes from the week of March 30th to April 5th, 2026. So put on your surgical gloves. We are performing a clinical forensic autopsy on a market that is operating with just unprecedented aggression right now.
I mean, it is a market defined entirely by brute force at this point. We are witnessing these software titans wielding leverage over global capital and, media narratives in ways that, well, 5 years ago, it would have triggered instant antitrust congressional hearing.
Oh, absolutely. Subpoenas everywhere.
Right. But the really fascinating part is watching that infinite leverage slam violently into absolute limits, specifically physical hardware infrastructure and human psychology. So if you were an enterprise listener or a founder, or honestly just trying to navigate this economy, you cannot afford to misunderstand this collision.
You really can't.
Because if you project software growth curves onto physical reality, you will crash your company right into a wall. Okay, let's unpack this. Let's start with just raw, unadulterated monopoly leverage. OpenAI.
Yeah, let's look at the numbers.
The SEC filings show a staggering $122 billion funding round, which pushes their private valuation to $852 billion. They trail only Apple, Microsoft, NVIDIA, and Alphabet.
It's absurd.
It is, but the mechanics of this money are what's truly aggressive. Like Amazon led with a $35 billion tranche.
And we need to unpack what a tranche of that size actually does to a corporate structure, because a tranche is just a specific slice of funding, right?
Yeah.
But Amazon's $35 billion isn't just a friendly vote of confidence.
It's far from it.
It comes with these highly engineered conditions tied to a mandatory IPO milestone. So Amazon is functionally weaponizing its capital to force OpenAI into the public markets on a very specific timeline.
I look at that and think, if you take $35 billion with an IPO gun to your head, you aren't making strategic choices anymore. You're just servicing the debt of your own valuation.
Exactly. You're a captive to the timeline.
And you see the immediate fallout in the executive suite. Like Brad Lightcap, the COO, is suddenly moved to special projects.
Yes, special projects.
Right. Denise Dresser takes over as chief revenue officer. Vijay Simo goes on medical leave, and Greg Brockman steps back into product. Corporate PR is, spinning this as scaling. But Clinically, this is a purge and polish for Wall Street.
It absolutely is. I mean, you don't rearrange your entire C-suite unless you are clearing the deck. Institutional public market investors demand pristine legibility.
They hate uncertainty.
Right. They want a ruthless commercial closer in the CRO seat, not some visionary. They want the complex deal makers hidden in special projects, totally away from the quarterly earnings call.
Out of sight, out of mind?
Yeah. They are calibrating the internal machinery to survive the brutal scrutiny of an S-1 filing.
But surviving public scrutiny requires way more than just a clean org chart. It requires actually controlling the narrative. And this is where the leverage gets deeply cynical, in my opinion.
Yeah, the media acquisition.
Right. In the middle of prepping for literally the biggest IPO of the decade, OpenAI acquires TBPN. That's the most popular daily tech talk show on YouTube and X, hosted by John Coogan and Jordy Hayes.
And the press release is incredible.
Oh, yeah. They claim TBPN will maintain editorial independence, yet the internal org chart shows them reporting directly to OpenAI's chief political operative, Chris Lethane.
The reporting structure reveals the entire strategy right there. I mean, at an $852 billion private valuation, there is a massive, terrifying gap between what private venture capitalists think OpenAI is worth and what public retail investors are actually willing to pay.
Especially once they see the compute costs.
Exactly. The burn rates are terrifying.
Let's test that assumption, though. I mean, is buying a YouTube channel really going to bridge an $852 billion valuation gap? It feels like a referee buying the sports broadcasting network right before the Super Bowl.
It's a bold move.
The conflict of interest is just so glaring. Will the public just immediately dismiss TBPN as basically state-run media for OpenAI?
Well, the goal isn't to brainwash the public. The goal is to drown out the friction. If OpenAI owns the dominant microphone, they can basically set the volume on the industry's most critical metric, which is compute costs.
Okay, I see what you mean.
Right. When negative stories leak about GPU shortages or failing model runs, TBPN doesn't have to lie. They just pivot the day's dominant discussion to, say, a huge breakthrough in synthetic data.
Distraction.
Yeah. It is a clinical demonstration of using software dominance to capture the media apparatus and engineer a protective bubble around your pre-IPO price.
Wow. So OpenAI is using private capital to buy the media narrative. But Musk, on the other hand, can basically extort Wall Street for billions to buy compute.
Yes.
But all that capital is entirely useless if he can't plug those servers into the grid. Which brings us to a mathematical impossibility in the U.S. supply chain.
Let's bridge that gap because, honestly, Musk's strategy makes OpenAI look almost subtle.
That's saying something.
Right. If we look at the confidential filings for Project Apex, which is the SpaceX IPO, we see a transition from narrative leverage to just sheer financial extortion.
The numbers on Project Apex are completely absurd. I mean, SpaceX is seeking a $1.75 trillion valuation, aiming to raise $75 billion.
Just massive numbers.
The previous record was Saudi Aramco in 2019 at $29 billion. Musk is planning to dwarf the Saudi oil monopoly by nearly a factor of 3.
Yeah.
But he needs that capital because SpaceX officially absorbed his AI company, XAI, back in February.
And deep learning compute is a physical reality that burns through cash way faster than rocket fuel. So how do you pay for it? You leverage the undeniable gravity of the SpaceX IPO.
This is the part of the autopsy that completely rewrites modern corporate finance. To manage this historic $75 billion offering, SpaceX lined up 21 of the biggest Wall Street banks and law firms.
The biggest players.
But Musk is requiring every single one of these financial institutions to purchase enterprise subscriptions to Grok, his AI chatbot. And they have to physically integrate it into their IT systems just to participate in the IPO deal.
Right. It isn't a suggestion.
No, it's a condition of entry.
It is the absolute definition of capital extortion. Wall Street incentive structures are built entirely on FOMO and fee pools. Those 21 banks are looking at the largest advisory fee pool in the history of capital markets.
They can't walk away.
No. If you are a managing director at Goldman or Morgan Stanley, you cannot afford, financially or reputationally, to be left off the SpaceX IPO prospectus.
But wait, aren't these banks violating their own fiduciary duties? Like, their IT departments are supposed to procure the most secure, efficient software for their clients' data, right?
In theory, yes.
Not just whatever chatbot is being held hostage by a space CEO. How is compliance even letting this happen?
Because compliance departments are highly skilled at masking extortion as exploratory AI R&D budgets, Musk doesn't have to convince a bank's chief information officer that Grok is technically superior to ChatGPT or Claude.
He just forces it.
Exactly. He bypasses market competition entirely. He weaponizes the bank's greed for IPO fees to forcefully create enterprise distribution and direct funding for his AI ambitions.
It's ruthless. So we have Musk extorting the global financial system to buy GPUs, but here is where the leverage hits a wall of concrete and copper.
Yes, the physical limits.
You can hold a bank hostage, but you cannot negotiate with a transformer. The data out this week on the U.S. data center buildout is terrifying if you are long on AI. About 50% of all planned U.S. data center builds this year are expected to be delayed or entirely canceled.
Which is staggering. The industry is calling this the physical compute wall. For years, we've operated at the speed of software. Code scales infinitely and instantly.
Yeah, you just push an update.
Right. But an AI model is ultimately just math running on electrified silicon, and we are now completely beholden to the speed of heavy manufacturing.
We need to explain the mechanism here because the public hears grid constraints and assumes we just need, like, more solar panels.
Right, they think it's generation.
But the bottleneck is highly specific. It's high-power transformers and switchgears. A transformer's job is to take massive, lethal voltage from a transmission line and step it down into usable power for thousands of server racks.
Crucial piece of equipment.
And a switchgear distributes that power safely so the data center doesn't literally catch fire. Before 2020, the lead time to get a transformer was about 2 years. Today, that lead time is stretched to 5 years.
5 years. And that 5-year delay mathematically breaks the economics of AI. An AI data center operates on deployment cycles of under 18 months.
They have to stay competitive.
Right. So if it takes 5 years to get the electrical equipment to just turn the building on, your servers will be 3 generations obsolete before they even boot up. The delay is rooted in a severe shortage of grain-oriented electrical steel and a massive deficit of skilled manufacturing labor. You cannot write a Python script to forge steel.
Exactly. No, it's actually worse than just a labor shortage. If you look at the supply chain data, it exposes a massive, critical geopolitical vulnerability.
The China imports.
Yeah. We are trying to build the future of American AI infrastructure, but China currently accounts for over 40% of U.S. battery imports and nearly 30% of certain transformer and switchgear categories.
The implications of those statistics are just profound. If a trade dispute escalates or tariffs are weaponized, the American AI boom simply halts.
It just stops.
Yeah. You can have a warehouse full of NVIDIA's most advanced chips, but without Chinese switchgears, they are nothing but highly expensive space heaters.
It's wild to think about. If you are an enterprise listener building an AI roadmap for 2027, how do you even plan for a future where the compute you're relying on might literally not have the electricity to run? You can't run a data center on venture capital vibes.
No, you definitely cannot.
For decision makers navigating these massive physical supply chain delays and capital allocations, DjamgaMind provides human-verified, technical-grade audio forensics across finance and energy. Visit DjamgaMind.com.
It's vital intelligence right now.
And when the hardware layer is this constrained, your software stack has to be ruthlessly efficient. The AI landscape moves faster than a hallucinating LLM on a double espresso. Etienne has done the heavy lifting for the AI Unraveled community. Head over to DjamgaMind.com/toolkit for the AI Executive Toolkit. It's a hand-picked, forensic-vetted implementation stack featuring tools like Chatbase, 11 Labs, and AIRIA, complete with exclusive listener perks.
That's a great resource. And while the macroeconomic landscape is slamming into that physical compute wall, the day-to-day application of AI is hitting an equally profound psychological limit.
Now, with a human element.
Exactly. The downstream effects are completely rewiring enterprise economics and human behavior at the individual level.
Let's dissect this human paradox, because the data shows two wildly opposing trends happening simultaneously. First, we have the ultimate realization of AI leverage, the solo unicorn.
Yes.
Look at the data on Matthew Gallagher and his telehealth company, Medvi.
It is the absolute destruction of the traditional startup blueprint. Historically, a healthcare startup required millions in seed funding just to handle, compliance, hiring, and basic infrastructure.
Teams of lawyers.
Right.
But Gallagher completely bypassed all of that. He took $20,000 in a suite of frontier AI models, ChatGPT, Claude, Grok, Midjourney, in runway.
And he didn't just use them to write marketing copy.
No, not at all.
Yeah.
He used the models to orchestrate complex APIs. Like he had Claude write the architecture to plug into Care Validate, which is an API that legally handles the physical doctor network and all the compliance.
Brilliant.
Then he integrated OpenLoop to handle the pharmacy routing and shipping logistics.
And what's fascinating here is the mechanism. The AI isn't just a tool anymore, it's the management layer. With only one single employee, his brother Medvi hit $401 million in sales in its first year.
In year one.
Right. And they are currently tracking for $1.8 billion this year. They operate at a 16.2% net profit margin.
Just to put that in perspective, their major competitor is Hims. Hims has thousands of employees, massive HR departments, traditional advertising agencies on retainer, and a fraction of that profit margin.
A tiny fraction.
Gallagher basically stripped out the entire human overhead layer. Medvi is what happens when one human is given the leverage of 5 different AI models managing automated physical supply chains.
It is extreme, hyper-efficient economic isolation, but that isolation is mirroring a much darker trend in society at large.
Yeah, this is the flip side.
Right. If we pivot from the solo unicorn to the new Ofcom report out of the UK, we see the psychological limits of this technology. We're witnessing the social retreat.
The Ofcom data is super jarring. Active use of AI tools like ChatGPT among UK adults jumped from 31% to 54%. People are conversing with machines constantly.
Yes, all the time.
Yet at the exact same time, the number of adults posting, sharing, or commenting on social media dropped from 61% to 49%. They are talking to bots way more and talking to humans way less.
We really have to ask why that trust inversion is happening. And the survey data reveals this pervasive, paralyzing anxiety. Nearly half of the adults surveyed are absolutely terrified that historical posts or even casual opinions shared publicly today will be scraped, analyzed, and used against them by future employers or AI vetting systems.
It makes complete sense, though. If you know that every public forum is being vacuumed up by massive web crawlers to train the next generation of models, the risk-to-reward ratio of participating in public discourse just plummets.
It completely evaporates.
Why tweet a photo or ask a question on Reddit if it permanently enters an immutable training set that could, cost you a job in 5 years?
Exactly. So they retreat. People are actively withdrawing from the public squares of information and building these impenetrable digital fortresses around themselves.
To hiding.
Yeah. You don't collaborate with a public community anymore. You orchestrate a private fleet of AI agents.
It is a profound paradox. AI is empowering individuals to become billion-dollar corporations from their basements. But those same individuals are too terrified of the digital panopticon to actually participate in society. Extreme productivity paired with extreme social paranoia.
It brings us right back to our core theme, the collision of leverage and limits. The leverage of synthetic intelligence is infinite, but the limit is human trust.
Right.
We no longer trust the internet, so we abandon it for private, hyper-productive silos.
And that concludes our clinical autopsy for the week. I mean, the tension is just everywhere. Massive software monopolies are buying up media to control their IPO narratives.
Yeah.
And aerospace CEOs are holding Wall Street banks hostage to fund their compute. Yet all of that infinite digital leverage is crashing into 5-year delays for physical switchgears and electrical transformers.
We can't escape physics.
We really can't. Meanwhile, the human layer is totally fracturing. We are being driven out of the public sphere by reputation fears, retreating into isolated, hyper-productive solo empires.
Which leaves us with a critical, structural question to consider as we watch this market evolve over the next few months.
Let's hear it.
If the ultimate promise of AI is empowering you to be a hyper-productive solo unicorn in your own private silo, but the physical electrical grid and the media narrative surrounding it are completely captured by 3 monopolies who dictate the exact terms of your compute, are we actually building a decentralized future of limitless individual potential, or have we already outsourced our digital sovereignty to the highest bidder?
Something to definitely think about. Subscribe to AI Unraveled on Apple Podcasts to listen completely ads-free.
That concludes our weekly masterclass for the first week of April. The strategic signal for this week is the friction of reality. In the digital realm, there are no limits. A solo founder can build a $1.8 billion healthcare company from his couch, and OpenAI can raise $122 billion on paper. But the physical world is demanding its toll. With 50% of all US data centers delayed because we cannot physically build the transformers and batteries fast enough, the AI industry is about to realize that you cannot generate electricity with Python code. As we navigate this gap between the software dream and the hardware reality, you need the right tools. Head over to the AI Executive Toolkit at DjamgaMind.com/toolkit for my forensic vetted implementation stack to get your firm running at light speed. This episode was made possible by DjamgaMind. If you want to stay ahead of the consolidation without the noise, hit subscribe on Apple Podcasts to enjoy all our daily and weekly briefings completely ads-free. I'm Etienne Newman. Stay sharp and keep unraveling the future.